All right, what is up, internet? We have finally left this range. We broke down yesterday and we've been consolidating right here, okay? And we're holding support right here at this order block, which is what I expected. But now that we have left this range of 1 month, okay, we've been chopping around. I wanted to document what exactly happened in this range because there's lots of volatility, lots of interesting stuff that happened in here, and I want future me to be able to reference this, okay? So, none of this is financial advice, of course, because I'm not a financial advisor. I'm also not a profitable trader, right? Yet. I'm not profitable yet. But anyways, I have separated out this range into 5 distinct price regimes. Okay, we had an accumulation period here. We had 3 distributions. Okay, we had redistribution right here. The redistribution is what led to the breakdown, which has occurred right here. Okay, now before I analyze all these different price regimes, I'm going to zoom out a little bit. Okay, or a lot of it. I'm going to zoom out so we can see, so I can see what the macro time frame looks like, okay? Because I think it's important to see the larger time frame at play, okay? We had a breakout here of the structure, and we came back and retest the top of the structure. It was a really perfect retest, okay? Because right here we had news that BlackRock wanted to file a Bitcoin ETF, and that's what created this impulse right here. So I want to zoom in on this price action here because I think before we even get into the price action that was up here, it's important to understand the price action that led to the actual impulse, right? The start of the impulse. Okay, we're taking a closer look now. I have on bottom here open interest so we can see what that was looking like. I'm going to remove that because this was the top of the structure. Okay, this line was the top of the structure, and very interesting how we get rejected off of it, right? And then we also come back and test it perfectly, right? But anyways, at the bottom here, I see Wyckoff. You have your selling climax right there, automatic rally right here, okay? You have a little bit of a structure test right here, and then you have a spring right here. So you do take out this low. You take out the stops before you have your impulse up, and this entire thing is your sign of strength right here. But you can see in the sign of strength, you can see another Wyckoff accumulation that takes place right here. We have your buying climax right there, automatic reaction right there. You have some structure tests up here, and then you have your spring right here. Okay, very powerful spring that comes to test the top of this structure. And then after this spring, you have an extremely powerful move to the upside, right? I don't think you even would have been able to get an entry off the midpoint anywhere in here until, let's see, we don't, at any point during this time, we don't even make it to the halfway mark, right? Okay, just looking at fibs, okay, it looks like you do make it back to the 236. I don't usually use fibs very much. I'm just doing this for a study, right? But it's interesting how we make it back to the 236 right here. Once we get to this high, okay, you get bounces off the 236 here, but you actually do break down right here, okay? Don't quite make it to the 382, right? But then it continues up on a very powerful impulse all the way up. Okay, just curious if we make it up here at this high here from this low of the spring, we don't even make it to the 236 there. Continuing up, we do get bounces off the 236, but then we do spring down here. But this is when we start the range here, okay? This is where the range begins. So back at the low here, just analyzing the open interest to see what that looks like. It does look like we're getting shorts that are piling on right here because you have to remember this has been down only price action until we came here. So it makes sense to me that once we took out these lows, people would be getting pretty bearish. And you can see that these were shorts that were piling on because once we had this move up, you can see all that open interest gets flushed out right there, right? Then of course, during our sign of strength right here, you have open interest that is increasing. It looks like there are longs that are piling on right here because once we get that spring down, you get a flush right here, okay? As we continue higher, I want to make note of how open interest is generally increasing, okay? Which is typically a sign of strength. That it goes to show that these are signs of strengths and that people are getting bullish in here. Because typically, from what I've seen, if open interest is declining when you're breaking out, the probability that it is a UTAD, that it's a distribution event, is more likely. But yeah, interesting to see how open interest is increasing as price is breaking highs. Okay, another thing I want to make note of is I have the 1 hour and the 4 hour exponential moving averages toggled on right now, and I just want to quickly look to see how price is interacting with these moving averages. And I'm going to go down to a smaller time frame, perhaps the 3-minute time frame, so we can get a closer look. Okay, so we're back down at the lows here. In my opinion, once price is accumulating, when price is accumulating or distributing, moving averages are pretty much obsolete. It's when the trend starts, like during these moves right here, or furthermore up here is when the moving averages become important, because it's interesting to me to see how price during these strong impulses will kind of surf the 1 hour exponential moving average, right? And then it'll kind of surf the 4 hour. But even here, you didn't really get a good hold of it. You break down, but the trend is still very much bullish. You break out of here. During this price regime here, during this period and during this period, the moving averages are pretty much useless. But once you actually start taking off here, like, it's just interesting to see how the price kind of reacts to these moving averages, kind of surfing the 4 hour and the 1 hour when it gets really bullish, right? And then once the moving averages start going sideways, that's when it's like an end of the trend. Okay, so yeah, we had the accumulation structures that happened right here, which caused this impulse. And now we can move on to the range. So the reason why I have these as distributions and not redistributions, and the reason why I specifically have this one as redistribution, is because in this range, in my opinion, these are distribution structures, because you're not making strong highs, right? You're making weak highs here, which correspond to UTADs, up thrust and distribution. So while yes, price is making higher highs, they're getting slapped down right away at each one of these highs, right? That tells me that it's distribution going on. And plus, if you just look at the lows get taken out repeatedly, right? Until finally we get into this period, this redistribution period right here, where volatility is dampened. Okay, the short squeezes are extremely small compared to what we experienced in the past, right? So price is struggling to break out here, and then finally that's when capitulation happens and we have a break out of the range. So I'm curious if this is something that you will see in other structures and other ranges when you do break down out of the range. I'm curious if the last pricing regime of the range will be met by a dampened volatility where price breaks down, or if you would have something like this, basically, where you have a UTAD event, right? Price distributes and then it kind of nukes down through all the stop losses, right, and sets a new low. That's kind of what I'm thinking, but it's just interesting to see how this range played out. Okay, let's focus first on this accumulation structure here. Okay, so you got your buying climax right here, automatic reaction right here. Okay, you have a spring right here and then a spring test right here. Okay, and that leads to a mini markup mode on a smaller time frame. But of course it gets slapped down. So this ends up being pretty much a UTAD in the grand scheme of things on the larger time frame. But it's interesting to see how this played out, right? How you took out this low, you created a spring, you had your spring test here, and then you pump up. This was definitely a UTAD in my opinion, because if you take this range right here, right, you can see that this right here, which is basically a last point of supply, was just mitigating the positions that were in this order block, right? Which kind of confirms that this is a UTAD. And you can see throughout this range, you have a last point of supply right here. You have another last point of supply right here. This is a last point of supply too, I would say. At the time, I thought these were a last point of supply as well, but it looks like there were a lot of shorts that got trapped at the bottom here and they got squeezed out, creating this as the last point of supply. And then of course we had a new shorts that opened up here, and the market of course squeezed them out, creating this as a last point of supply, which I know I'm not using the terminology properly, because a last point of supply in theory is supposed to represent the last point where price made it, right? So this would be your last point of supply right here. This would be your last point of supply here, and this right here. Okay, the fact that price is coming up here would mean that this would be the last point of supply and not these. But the reason why I refer to these as last point of supplies is because in cryptocurrency, basically what ends up happening is you have shorts that open up at the bottom, right? And then the market makers squeeze them out to the upside, right? Which is why you basically have these new highs that are created. You have this new high that is created here because all the shorts that accumulated here are getting squeezed out. And that's why it gets slapped down, in my opinion. Okay, it gets slapped down because the futures is bidding up the market, squeezing out the shorts. Okay, people hop on these moves believing that they're real, organic. They open up longs at the tops here, and then they get absolutely wrecked when the market reverses on them, because the move in of itself wasn't genuine. So in my opinion, yes, this is your last point of supply right here. Okay, this is a last point of supply here, but then because the market is dynamic, there was a lot of shorts that opened up here, which squeezed them out right here, creating this basically another UTAD right here. So technically, maybe it is not correct for me to call these last points of supplies. Maybe it would be better for me to call them UTADs or something like that. But let me know what you think in the comment section down below. But yeah, so that's basically what happened in this distribution area here is you had a UTAD right here, okay? This right here came to mitigate the positions of this order block, okay? And then you have another mitigation of these orders right here, which was the shorts that accumulated at the bottom here. Another thing that's interesting is that after each one of these UTADs, you end up taking out the previous low. So this UTAD took out this low, this UTAD took out this low right here, and then of course you had another UTAD event right here, which took out this low with this wick right here. Okay, just taking a look at the CVDs in this range, it looks like spot is continually selling here. Futures looks to be selling here too, but it looks like there was a little bit of a squeeze, a bid coming from futures here, which squeezed the market up. Again, throughout this distribution period, futures is also selling, but you can see there's periodic bids coming from future, which triggers the squeezes up. Okay, especially right here, you can really see the divergence from futures and spot. It might be a little difficult for you guys to see, but if you look closely, you can see futures is kind of bidding up right here while spot is flat. You can really see this is a good example of how futures can really bid the market up, you know, creating those squeezes to the upside, running the stops of people. You know, once you fall back in here, you had a lot of shorts that opened up in here, which squeezed the price up even more. And the thing about these moves up too is because futures can basically step up the market, creating this artificial demand. People falsely believe that the move is organic and that it is real, which is why people open up degenerate long positions at the tops, which end up getting slapped down. Because once future stops their TWAP, once future stops bidding, the market makers basically, once they turn off their algorithms and they stop bidding, then price actually reverts back to its basically the last point of demand where organic demand will actually step in. Either that, or I believe they can halt the market, placing large bid walls to prevent the market from falling further. But that's kind of just like a predatory market theory that I've been exploring. Okay, you can really see in the open interest what's going on here. So you can see right here, there was a significant amount of what appears to be shorts that opened up right here. And the reason why I think these are shorts is because on this move, when you clear this high, you can see that there is a flush in OI here. So there was a lot of shorts that got flushed right there, right? And then throughout this period right here, OI tends to be pretty flat for the most part, right? But what's interesting here is once you start breaking these highs, so if you take this high right here, once OI breaks above here and you start getting to increased levels, that tells me when there's going to be moments of volatility right here. So open interest in this price regime right here was at a local high here. Right here, you can see how much open interest increased. It increased almost 7%. While price was making higher highs. So this tells me, based off price action, that people were probably opening up longs here, right? Now that I think of it, it's difficult to determine whether or not they are longs or shorts that open up in this moment. Your best bet is to look at price action and look at liquidations to see if there's anything out of the ordinary. So for example, right here on this move down here, you got a lot of longs that got liquidated right after a break of the structure. And then you had, and then again, on this break of structure right here, you can see longs got liquidated right here, about over 1 million longs liquidated. Once you start clearing these highs, you can see the shorts start getting liquidated. Shorts got liquidated again right here, and then you had huge long liquidations right here, over 8 million long liquidations on this move right here, and you can see the flush in OI right there. So that tells you that yes, because OI flushed so much right here, there were a lot of people that got liquidated in here. There's a lot of longs that got flushed here, and it makes sense because you take out this low here. So if anybody that had their stop anywhere in here got absolutely wrecked by that move. Another thing that's interesting to me is on this move right here, you can see OI increased substantially. Looks like it increased by almost 6%. Even on the retrace down here, OI is remaining largely flat here. So that's very interesting to me. That makes me wonder, were these longs or were these shorts that opened up right here? Okay, unfortunately, I can only use the 30-minute time frame in Coinalyze, so we don't have the highest resolution, but okay, so we're looking at this period right here when open interest was increasing right here, and it does look like it was longs because funding rate is increasing, okay? If funding rate was decreasing and open interest is increasing, then that tells you that it's more so shorts, like as you can see right here. To be honest, I'm not sure how accurate the funding rate is on these larger time frames, these 30-minute time frames. I use it more so on the 5-minute time frame, and I feel like it does give accurate signals. But I don't know, that's just kind of a note to myself, because the thing that I'm wondering about is right here. See, it looks like funding rate is decreasing right here, right? As price is going up higher, which would insinuate that shorts are entering because open interest is increasing. But I know for a fact, because I was trading this area, that there were longs entering right here, which is why you had such a huge flush in OI once this move came. So I don't know, just something, I'm just kind of talking to myself, just a note to keep in mind. Okay, so we had this large move down, right? And a huge flush in open interest. And what's also interesting to me is I'll have to explore this more and backtest this to see if it is true. But one thing I've noticed is that once you start, if you just do TA on the OI, and once you start breaking structure, like making new highs or making new lows, that's often indicative of a bottom, right? Because you can see from here, open interest increased by almost 13%. And then once this low was taken out, right, at the bottom here, once all this OI has been flushed, that is when we actually found somewhat of a bottom right here, right? Like it doesn't mark the bottom perfectly, right? But it could be an indicator that a bottom is near. Again, not financial advice. This is just like me talking to myself, personal journal. Yeah, just looking a bit closely at what happened here. Looks like you had this liquidation wick down. Okay, you had this flush in OI, and then OI went flat for a little bit, right? It looks like there were probably a lot of shorts that opened up at the bottom here, which caused this squeeze and caused the rest of the OI to be flushed. Another thing that's interesting about this distribution period here, after this huge OI flush, is I wonder if there was a lot of shorts that got trapped here, because price is kind of just grinding up right here. It almost looks as if the market makers are stepping the market up in order to squeeze the shorts that entered in right here, because they're pretty much trapped. If you went short at the bottom here, then you're trapped for pretty much 5 days. You're underwater, right? Because you barely make it out. You barely get an opportunity to close your position until you come to right here, right? And you kind of wick down there. So maybe that's why we caught support over here, is because the people that were trapped in here started closing the positions. Another interesting thing is you have another huge increase in open interest right here. That's an increase of about 9%. And what's interesting here is that even as price was making lows right here, OI was just kind of going down steadily. Because if these were longs that opened up in here, then when you would get these breaks of structures like right here, or these breaks of structures right here, you would see a sharp flush down in the OI, and you're not really seeing that. So what that tells me is that this could be potentially shorts that are opening up here, and potentially shorts that are closing positions as price is kind of grinding its way down here. But then again, you have an accumulation period right here, and then price actually steps up right here, squeezing out all the shorts, running all the stops that accumulated in there, and then it gets slapped down, right? And you can see the open interest increase again by 13%, right? So people are longing this, believing that it's an authentic move up, when in reality, it's probably just a manipulated move, and it gets slapped down, of course, taking out these lows. Okay, looking at the CVDs, you can see spot is continually selling throughout this range, although futures is stepping up the market. The futures is bidding up the market. You can see in this regime right here, futures is gradually selling, but it looks like futures catches a bid here. Looks like spot catches a little bit of a bid because it's staying flat here, but it looks like futures is the one that initiates the move to squeeze up, right? And then of course, it gets slapped right back down. Now this would be something that would be better to look at a smaller time frame. I'm on a 15-minute time frame, but let me see if I can go down to a 5-minute time frame. We'll see if Aggr Trade allows us to go back this far. Unfortunately, it does not look like it, so we will stick to the 15-minute time frame. So basically, you had upthrust and distribution right here, and then you had another upthrust and distribution that played out right here. And then once you ended up taking out these lows, you started a new price regime in here of another distribution. And it's basically, in my opinion, the same thing that happens. Basically, people get really bearish and they short the bottoms, and then the market makers continually step up the market to squeeze these positions out, right? And then once the positions get squeezed, the market returns back to an equilibrium of some sort, right? Where market sentiment is gauged, and shorts open up again at the bottoms, which are then squeezed. Because I was trading this. I actually caught a decent long on this move, and you can see in the CVDs, futures was bidding up the market here, squeezing out these positions. And on this move here, it looks like a lot of people got bullish, opening up long positions, which of course were slapped back down, which is why open interest flushed as well. So price slowly squeezed up, which is interesting. I wonder if there were just people that were trapped in here, but it does not look like there was too much open interest that increased, right? But we came back down, found support here. OI not really giving too much of a signal, although when you do break this high, once you break this high here, you can see that open interest does flush. So it looks like there were some shorts that got flushed there. But then again, on this move up, you have a lot of people longing this move up, thinking that it is genuine. When in reality, I mean, we do take out the high. Oh yeah, that's right, because this was when Ripple won the SEC lawsuit. So you did have like a huge news event that triggered this squeeze up. but ultimately this ended up being a UTAD event, right? In the grand scheme of things, and we nuked down to start this redistribution phase. Okay, looking at the CVDs once again, okay, you can see futures generally selling, spot selling. That's a common theme throughout this entire period here, is spot is selling, not very much buying coming from spot. So futures is selling, and then again in this price regime here, if you look close enough, you can see the divergences that are playing out in futures and spot. And if you were on a smaller time frame, like a 5 or 1 minute time frame, you could really see how apparent it is. But you can see this low here, futures is stepping up the market bidding while spot at the same low is selling, right? So this tells me that, okay, futures is initiating some sort of campaign to squeeze the market up, right? And if you want to do the range of this area, okay, you squeeze up, you do pop up above the midpoint of the range, right? It looks like, but you don't make it to the bottom of here. Oh, you do retest the backside of this order block right here before you get slapped down. So that is interesting to see. Okay, again here at this low, you can see the same thing play out. If I just take my cursor right here at the low, you can see futures is bidding up right here, while spot, okay, is remaining flat and selling mostly, right? But it's when futures and spot start bidding simultaneously where you have that squeeze up, and you take out these highs. You take out all these highs, right? Because this was that news event, right? But then even at the top here, you had futures selling, spot selling. I might need to study this structure a little bit more because I did not see the nuke coming. Like I was expecting downside, but I did not see it happen in the charts. So I was caught a little bit offsides, but I mean, if we just take the range here, there's your selling climax or your buying climax and then your automatic reaction. It looks like we hold above the midpoint right here. It looks like there's distribution going on right here. You have a upthrust right there, which starts the downtrend, right? And then you come back down here. And then price does have another redistribution period right here. And you have an upthrust and distribution right here. Does not make it to the midpoint, which maybe shows how bearish it is. But you do get a retest of the backside, the underside of this redistribution right here. That could have been a good entry point if I was able to get in right here. I actually did have a short that I took right here, but I closed out of it right here because I was expecting price to kind of come up here, like take the highs before nuking down, and that's not what ended up happening. Okay, then of course, after this distribution event, you have a huge move down, and then you have a huge flush in OI, which is actually the lowest open interest has been in this range, right? You even take out this low. Interesting enough, see, once this low is taken out and you get that flush in OI, it kind of coincides with a bottom being formed. But what's also interesting here is you can see quickly after the sell-off, you can see open interest increase right here, okay? So that is very interesting. That tells me, that makes me wonder, are these longs or are these shorts that have entered the market? Just reading the OI, it looks like these were shorts, but there must have been a lot of selling pressure here because look at this UTAD event right here, right? You didn't really get that much of a flush, and also these shorts they really never experienced pain. Okay, if these were longs, once this low got taken out, right, you should have seen like a substantial flush in OI here, but that's not what happens. You actually get the flush in OI when this move happens to the upside. You can see there was a flush there, so that tells me that there's a lot of shorts in here. I actually do have this area annotated a bit more since it's the most recent price action and I wanted to study it. So you have your UTAD distribution, you have a redistribution here, selling climax, automatic reaction. You have a spring or sign of weakness, right, which comes to mitigate some of the which kind of mitigates some of the orders that are in here, right, before you create this mini UTAD, right? Then next you have an avalanche distribution where each low is sequentially taken out by the next, right? Yeah, this is a sign of weakness because you take out this low here, right? You come back up with a little bit of a rally, probably because there are a lot of people that entered short on the bottom here, and then market makers flush them out. You can see that in the OI. But then, of course, you're not able to set another high. The bearish trend still remains intact, right, until you get your selling climax right here. And that starts a new price regime of redistribution where you have selling climax, automatic reaction, structure test. You have like basically a spring, sign of weakness, spring test here, and then you have a UTAD event right here, of course. And then usually when you have these UTADs, you're going to come take out the lows, which is actually what happened here. We didn't take out this low until we actually broke the range here, but you can see here we had another redistribution event, selling climax. You had a little bit of a spring here, automatic reaction. You have a little bit of UTs right here, up thrusts. And then here, of course, you have your sign of weakness and your spring, which is basically coming to mitigate the volume that happened in right there. And that is the start of the mini markup, which creates this UTAD. And of course, this UTAD coincides with probably a mitigation of these orders that happened in that order block. And then we broke down, okay? And then of course, I'm waiting to see whether or not this is a reaccumulation or a redistribution. My bias currently is that it is a accumulation of some sort, and we're gonna squeeze up, potentially taking some of these highs to mitigate some of the volume that happened in this UTAD distribution. I mean, because if you even take the range of this swing high, swing low, you never even make it up to the midpoint here, which really shows how bearish it is. Okay, if we come back down to like this low or even this low here, you never make it up to the midpoint here, and the orders in here have not been mitigated. So I mean, if we do squeeze up here, there's probably a lot of people that are opening up shorts in here. And if the market makers, I do know for sure that there were a lot of shorts that opened up right here that are currently in profit, but there's also a lot of longs that opened up right here. So I'm waiting to see what happens here. But if we do get a squeeze up, it would make sense. I would not be surprised if we end up clearing these highs and we make a move at least to the middle here. You know, ideally it would be nice to make a move to somewhere in here to mitigate some of these positions. If we did make it up here, that would be kind of the ideal short entry, but we'll have to see what happens. I think in the next video I'll talk more about the current price action, because I want this to be more fixated on this range that we've been in. Okay, looking at the CVDs of this range, here's that UTAD event, and then you can see all the long liquidations we had there. But just zooming in, you can see futures very bearish, going down, right? So it makes sense why this UTAD that happened right here is very small. And then once we move into this avalanche price regime, very much down from CVDs and futures. Here you have another good example of once that OI was flushed right here and you had this sign of weakness, you can see futures stepping up the market while spot is just flat mostly, right? So futures squeezing out the shorts that accumulated in here, right? But unable to set a high here. So the bearish price action is still intact. You can see all the long liquidations here, and you can see the short liquidations that happened on this move up here. And then finally, we set a new low here, and then really here you can see how futures is starting to step up the market. On this selling climax here, which coincides with this long liquidation, you can see futures kind of bidding here while spot is selling, right? So that could have been the first sign of a much larger move to come. I mean larger in the context of like this range, right? Because you come up here and then futures again bidding at the lows here while spot is selling, and then you have a squeeze up, you know, which doesn't even clear this high. It kind of makes it to about right here. But these moves, if you can, I'm trying to study the price action so I can hop on and capitalize on these moves, so I can identify these moves before they happen, you know, so I can long the bottoms and short the tops. But of course, because this was a manipulated move up and there was no actual organic demand, it got slapped down right away and you had a bunch of long liquidations. Yeah, you can see it here, open interest increasing as price is grinding up, right? Then you have that move down, which flushes a lot of the open interest, but look at that, it spikes up right away here, which was very interesting to me. Okay, you have this huge spike in open interest right here that coincided with this. So what was going on there was that a lot of shorts that entered. It does look like it could have been shorts that entered right there, which got squeezed out right here, right? Because OI is kind of drifting down throughout this price regime here. Okay, you have, it looks like longs that got liquidated on this spring. But if these shorts definitely didn't get squeezed out here, then they definitely got squeezed out right here, which is, you can see the flush in OI here. I mean, if you just do some TA and set a low there, you can see on this move here, we actually get that flush in OI. And throughout this period, OI is decreased as price is going down. So people aren't even opening up positions until this move right here. Okay, until here, you can see the amount of OI that opened up here. And it does look like these were short positions, because when we did take out this low, right here, you can see that there was barely a drop in OI, okay? So that tells me that there is currently shorts here that are in profit. So open interest has been increasing in here and price is kind of grinding its way up right now. Although I'm not gonna talk about this too much. I'm gonna save that for the next video. Okay, this video is getting kind of long, but last point I wanna make is just a note to myself to make sure you're reading price from left to right and really make use of the parallel channels, the range, to see how price is responding, right? And when I mean read price from left to right, start with the top, go to the bottom and see what price is doing, okay? So price bottomed out right here. It looks like it had a little bit of a spring right here, and got rejected off the midpoint right here, right? So it got rejected off here, was not able to make it through here, and then it set a new low, okay? So then now we can move this down a little bit low, and look at that. Price is getting rejected off the midpoint right here. Yet, we still had the squeeze up. So what was going on there, right? And then that's where it becomes important to look at the CVDs to see what your bias is and what's going on, in the broader trend. That's where it becomes important to look at open interest to see what's going on here, because, okay, we see open interest is increasing. So in this regime, we're getting rejected off the midpoint. That seems very bearish. Are people opening up shorts here? Because if people are opening up shorts here and futures is starting to bid the price up, it's very likely that these shorts that are accumulating here are going to get squeezed, which they did right here on this move, okay? And then, of course, it's the same thing when you enter in a new price regime, okay? Take the high, look at the low, see how price is reacting here, okay? So after a low is set, you hold above the midpoint a little bit, but you are unable to hold, right? You break through, right? A new low is set here. You don't even make it back to the midpoint here, okay? And you keep setting new lows and lows here. Set a new low right here. Okay, let's bring it over to the side here. And then this is also very interesting how after this low is set, you hold above the midpoint, but it looks like distribution, right? And then which fails, and you come and you set another low right here. So let's take this and extend it out and see how price is reacting throughout this range, okay? Unable to make it to the midpoint here. It looks like you do make it to the midpoint here, although it is looking very weak, okay? And another thing you can do is you can take local highs and local lows, and look at this range as opposed to the larger range to see how price is responding, because right here it makes a bit more sense. Okay, you're getting rejected off the midpoint right here. It makes sense, like you're coming back up here to mitigate some of these positions right here. All right, this video is getting much too long. If you stuck around to listen to the whole thing, appreciate it. Let me know your thoughts in the comments down below. But once again, this channel is literally just supposed to be my personal trading journal. So no financial advice. I'm not a financial advisor. I'm not even a profitable trader yet, but I hope by making these videos and by documenting my experiences, I will be able to become profitable. But thanks for watching, and I'll see you next time.